What's up, guys? Welcome back to the Passive Income Star channel. I hope you guys had a great holiday. If you're new to the channel, my name is Skig and I make new videos every Friday. Now, today we're going to take a look at 3 ETFs that you can own to get a piece of the Chinese market. So get ready for some free game. We're about to get it. All right, so before I go ahead and touch on the 3 ETFs to own a piece of the Chinese market, I just wanted to give you guys a quick update on the portfolio. As you can see right now, the value is $34,575.72. I am up today $255.33, and then after hours it went up another $39.22. The market has been on a crazy run, I would say, the last couple of days. Today, as you could see, it started out at 34K 317, and then we had a little dip here, and then after that it just kept going up and 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 up, and it's leveled off to where it is now. Everything I would say I own is pretty much in the green, with the exception of Boeing. Boeing recently had some news as far as the CEO, Dennis Muilenburg. They decided to relieve him of his duties, and it's obviously based on the fact that a lot of things happened on this guy's watch. So hopefully the replacement will be someone that can handle business, turn things around, and get the company back on the path to greatness. Also, guys, if you don't follow me on Instagram, please do. My Instagram is passiveincome_, and just to show you, I have pretty decent quality, I think, in terms of my post. This is my most recent post today, and this was a post about Yahoo Finance naming Reed Hastings the CEO of the decade, and this is one of the guys that co-founded Netflix, and he's also the CEO of Netflix. And pretty much the post was just about the stock being at $8 roughly in 2009, and then fast forward to today, it has increased 3,700%. So this and a bunch of other factors, they have named Reed Hastings the CEO of the decade, and I would tend to agree as well. But that's my Instagram, guys, so you could go ahead and check it out. All right, so the first ETF we have on the list here is the iShares MCHI China ETF. The ticker is MCHI. The current price is $64.19, and it is below the 52-week high, which is $65.25. The fee for this ETF is 0.59%, and the 5-year return on investment is 29%. If we hop on over to Robinhood here, we could see that over the last 5 years, the stock is up $14.78, or 29.91%. The stock is owned by 1,464 persons on Robinhood. If we scroll down here, it just gives us some basic information about the ETF. It says MCHI tracks a cap-weighted index of investable Chinese shares. The fund stretches across all market cap sizes. If we scroll down some more, we'll see that it does pay a dividend. The yield is 1.46%. Now what we're going to do is just go ahead and jump on over to the website for this particular ETF. The ETF, as you guys can see, is an iShares ETF. If we go over here, we could see that the fee is 0.59%. And if we scroll down here and just take a look at some basic information on the site, it says here as far as performance, growth hypothetically of 10,000. If you invested 10,000 since inception, this is where you would be right about now. All right, if you scroll down some more, it gives us pretty much the return over the years. And if we go down some more, it gives us some basic information as far as the holdings. So this ETF has Alibaba in there, which is a very popular Chinese company. Then there's Tencent, and there's Chinese Construction Bank, and there's Ping Insurance, China Mobile, Industrial and Commercial Bank of China, and then there's Baidu. Baidu is pretty much like the Google in China. All right, so then we have Bank of China. So this covers a wide array of companies. I do see a lot of banks in here, and I see a couple of tech companies as well. So it's a pretty well-rounded ETF if you're looking to get some exposure to the Chinese market. All right, so next up we have the SPDR S&P China ETF. The ticker is GXC. The current price is $102.43. It is below the 52-week high, which is $104.98. The fee associated with this ETF is 0.59%, and the 5-year return on investment is 29%. If we hop on over to Robinhood to take a look at this, we'll see that this ETF is owned by 422 persons on Robinhood. And if we take a look at the 5-year performance here, we could see that over 5 years, the stock is up $23.51 or 29.79%. If we scroll down some more, it gives you some basic information on what the ETF is about. It says here, GXC tracks a broad cap-weighted index of investable Chinese shares. The fund's holdings stretch across all market cap sizes. If we scroll down some more, we can also see that this ETF also pays a dividend. The yield is 1.61%. If we hop on over here to the ETF website, we could get some basic information on what this ETF is about. And don't worry about it, guys. I will leave links in the description for all the ETFs, so you guys can go to the website and look over the prospectus, look at the basic information as far as the fees and the different holdings. All right, so this one here says, just to give an overview, it says the SPDR S&P China ETF seeks to provide investment results that, before fees and expenses, corresponds generally to the total return performance of the S&P. So pretty much this ETF, it's very similar to the one before. It's just that this one is designed to, I guess, try to replicate the performance of the S&P 500 here in the United States. But obviously it's doing this in China with Chinese companies. All right, if we go ahead and we take a look here, we could see that the gross expense ratio or fee is 0.59%. When we get over to the holdings, we could see this one also has similar companies like the previous ETF. We have Alibaba here. We have Tencent, we have China Construction Bank, Ping Insurance, Industrial and Commercial Bank of China, and then we also have Meituan, China Mobile, Baidu, a lot of banks in this ETF as well. If we go down here, it gives you a breakdown as far as the different sectors. So it says here 26.40% is in consumer discretionary, 18% is in communications, financials represent 20%. Then we have real estate with 5%, consumer staples with 4%, healthcare with 4%, energy with 3%, materials with 3%, utilities with 2%, and information technology with 5%. So this ETF is obviously not very heavy on tech companies, but it's definitely heavy on consumer discretionary products and also financials. Grain shares, CSI, China Internet ETF. The ticker is KWEB. The current price is $49.53, and it's pretty much roughly about the same price as the 52-week high, which is $49.69. The fee on this is 0.76%, which is the highest fee so far. The 5-year return on investment is 47%, so this also has the highest return on investment. If we go ahead and hop on over to Robinhood, we can see that this ETF is owned by 1,392 people on Robinhood. Over the last 5 years, the stock has returned $15.85 or 47.06% over the last 5 years. So that's pretty good. If we scroll down some more, it just gives us some basic information about the ETF. It says KWEB tracks a foreign equity index composed of overseas listed Chinese internet companies. This one does pay a dividend, but it's a very, very, very small dividend. As you can see here, it's 0.03%, which it kind of makes sense because most tech companies really don't pay a dividend. And if they do pay a dividend, it's usually not great. And this ETF is focused around tech companies. So, that's to be expected. All right, so we're going to go ahead and hop on over to the Grain Shares website for this ETF. So on the investment strategy here, it says KWEB seeks to measure the performance of the investable universe of publicly traded Chinese-based companies whose primary business or businesses are in the internet and internet-related sectors. KWEB provides access to Chinese internet companies that provide similar services as Google, Facebook, Twitter, eBay, Amazon, etc. Exposure to companies benefiting from increasing domestic consumption by China's growing middle class. Exposure to China's internet companies listed in both the United States and Hong Kong. All right, if we scroll down here, it just gives you some pretty much sector highlights as far as internet usage in China and spending online in China as well. So it says here Chinese retail web sales total 1.31 trillion in 2018 compared to the US, which was 513.6 billion in the United States, representing an increase of 23.9%. China's internet population reached 829 million people, a penetration of only 59.6%. The US internet population reached 287 million people, a penetration rate of 88.5%. So, those numbers pretty much speak for themselves. Total Chinese retail sales reached 5.5 trillion in 2018. Online shopping accounted for 23.6% of retail purchases in China in 2018. So obviously, the internet economy there is growing. So you investing in this ETF, I think, would be good. because like I said, you would get exposure to a growing market. If we scroll down some more here, we could see the breakdown of the ETF, and we could see that pretty much tech has the biggest sector, right? And then second to that, we have discretionary with 33%. Tech represents pretty much 60%. And then we have financials with 1%. So this is a big contrast to the previous two ETFs who were heavy on financials. A lot of banks were, banks and primarily banks. And I saw like one or two insurance companies as well. And then we have industrials here with pretty much 4%. All right, so we break it down in terms of market cap. Large cap companies represent pretty much 68% of the entire ETF. And then we have, mid cap companies with 26%. And then we have the small cap companies with roughly 4%. So as far as the breakdown of, the different companies in the ETF in terms of market cap, this is usually a good sign that, the bulk of the ETF is actually in large cap companies. All right, so let's go down some more here, and we're going to take a look at the holdings. And you guys will notice across the board on all three ETFs, you all saw Alibaba. And the reason for that is Alibaba is very, very, very popular in the US. If you are into, like online sales like myself and like a lot of other people that are also getting into like drop shipping, Alibaba owns AliExpress, and AliExpress is very popular with people who, drop ship stuff from China. Also, you have, companies like Shopify that has like an entire ecosystem built around, AliExpress and Alibaba. And then also Amazon, one of the largest companies in the world. A lot of their products come from, Alibaba or AliExpress. And a lot of the persons who participate in their FBA program, Fulfillment by Amazon, they're also getting products shipped from China to Amazon from Alibaba. So Alibaba is huge, and that's why you'll see in all these ETFs, it's usually the first company listed, and it's usually the company with the highest percentage in terms of, how much market value is allocated to that particular company in the ETF. So Alibaba is huge, and that's why you keep on seeing the company. Next up is Tencent. And Tencent is pretty much like a gaming company, and gaming is huge there. There's a huge culture built around gaming. So that's why you're going to see that one as well. Meituan, I hope I'm pronouncing that right, but Meituan is pretty much like Amazon in China. And then I just told you guys this before, but Baidu is pretty much the Google. Other companies you have here like Tal Education. This is a company that does like tutoring, and they're pretty popular as well. So, this ETF for me, if I was to go ahead and only pick one of the three, I think it would be the KWeb, for the simple fact that, it has the highest gains over the last 5-year period, I would say, of all three. It doesn't pay, that much of a dividend, but like I said, the ETF is based around tech companies, and tech companies usually don't pay, any kind of dividend, and if they do, it's small. However, the advantage you will have of, dealing with tech companies, when those stocks explode, they explode like, crazy. Like, if you just look at Netflix, look what happened with Netflix, streaming company. And, December 2009, the stock was pretty much $8 a share. And look at it now, it's trading today well over 300. So those companies blow up pretty quickly. Amazon, when I bought Amazon in 2017, it was $800 a share. Now it's up to $1,800 a share. So tech companies blow up pretty quickly. And if I was to, invest in any of the three, I think this would be the one that I would choose. All right, let me know, guys, in the comment section below which one of these ETFs you think you would be interested in getting. All right, so that's it, guys. Thank you so much for watching the video. If you are new to the channel, I make new videos every Friday, and starting on the next video, I'm going to be doing something different as well, so you guys will see that next Friday. All right, if you like the information presented here, please go ahead and smash that like button and subscribe if you like videos about, investing as well as e-commerce. Thanks again for watching the video, guys, and y'all have a great day.